Now we're going to go on to fixed asset settings, and these can be accessed also through the fixed asset module or feature, whatever you want to call it. But we're just going to nip into here and get this all set up for you. So this takes you into the fixed asset module. So we get rid of that. And then you can click here on settings and set up the settings. So the main settings you'll need to do, again, we're going to get rid of that. The main settings you'll need to do is change the start date. So if you haven't used fixed assets before in Xero, you'll need to set a start date, and it will need to be the the start of the first financial year that you're using Xero for will be your start date. If you do change your year end within Xero, you may need to find you come in here and change it. But I would always recommend doing that with the help of a bookkeeper or accountant, because it is quite complex, and it can easily go wrong. So yeah, I'd always ask somebody to help with that if you do need to change anything like that. You've then got your asset types. So these basically will ping back to all the asset accounts. So this one's already set up with computer and office equipment. So let's look at the motor vehicles as an example. So put motor vehicles, the asset account would be the motor vehicles. The depreciation, where it goes to on the balance sheet, would be literally less accumulated depreciation, and then the expense would always be the depreciation expense. Now, depreciation, if you're not aware, is the way. So obviously, any asset will lose money. It's never worth the same as what you bought it. So it depreciates in value, and depreciation is paid for cost until you actually come to sell the vehicle, which, for example, or asset. So we need to account for the value depreciating in the accounts as well. So as ever, there's a debit and a credit. So there's a cost element to the depreciation, which goes into profit and loss, but also on the balance sheet, you need to show the depreciation to date so that you get the correct value of the asset at that point. Don't worry if that doesn't make too much sense. It will make more sense as you start to learn more about accounts and things. But yeah, for now, you've got the accumulated, which is part of the asset, and then you've got the expense here. You then need to tell it the method to depreciate. Now, again, this is something to check with your accountant, especially if you are an ongoing business, just setting Xero up, but you've been going on and you've had accounts and assets previously, because they will have already set the depreciation methods. But generally, I'll say generally, there is only a couple of options anyway. Let's move me up there. It would be one of these two options for depreciation for the majority of assets that you'd be looking at purchasing. So you've got straight line and reducing balance. So straight line is literally where something reduces over its lifespan. So for example, we use this quite a bit with tools. We know they will only last 3 years, so we depreciate it over those 3 years. So that'd be on a straight line, and we'd give it the effective life of 3 years. And I personally, because I'm quite perfectionism-y, I like to depreciate over the actual amount of days rather than just in months. So it's a little bit more to the penny, but it's entirely how you like to do it. Again, double check with your accountant if there's a preferred way for them, but I would always do actual days. And then you can click save. For things more like vehicles, it's not a linear, they depreciate over a certain amount of years. They reduce in value more at the beginning and then less as they get older. So you can do it as a reducing balance. And then you would use more of a percentage rate, and the standard rates would be 25 or 33% generally are what we use. And I would use either one of those depending on what it is, what type of car or vehicle or computer or anything like that. So I'd normally go for the 25%. That to me feels more general. But again, double check with your accountant in case they've got a preference. But you just put the details in and click save, and then it's all set up. And you can do this as you go. So as you buy a new different vehicle that's not been set up before, or you can just set them all up to start with. Either or is fine. And then you just want to set up the default journal accounts for disposals. So again, you may want to double check this with your accountant if they've got a preference. But generally, we would have, I'm just thinking it's probably not set up. It's not set up. So we would set up a profit or loss on disposal accounts. We would set up separate accounts for each of these and then choose the relevant one. So you could put that, for example, as other revenue, but I personally wouldn't. I would set up a separate one for it to say gain on disposal, loss on disposal, and capital gain on disposal, so that they're all very clear and separate in the accounts. But depending on how your accountant likes it done, you can ask them to do it. And again, you don't actually have to do this until the time comes for you actually to dispose something, so don't stress about it once you're setting it all up. But just so you know, that's where it is when you do need to set it all up. So yeah, that's the fixed asset settings.